Three, two, one. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to exit highly appreciated cryptocurrency, real estate. It could be a business. It could be public or private stock. Tax deferred, you can defer millions of tax, and so you can create and preserve more wealth or help your clients, friends, family do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, crypto, and business minds in the world where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is out of Chicago area, Chicagoland, and he's also the founding principal of Liberty Real Estate Fund. It's a net lease property fund curated to create a conservative, safe haven portfolio of long-term, single-tenant net lease properties designed for geographic diversification, tenant credit diversification, and industry. He's a long-term broker, owner, and also property manager. He's been in the business a long time, and he has a ton of wisdom to share with us. Please welcome to the show with me, Michael Flight. Michael, how you doing?
Brett, thank you very much. I haven't heard the word Chicagoland for a long time, so you must have either driven through or been around for, to hear that.
Have some friends over there. And by the way, we're also streaming on Expert CRE Secrets out there as well. So for any of our commercial real estate folks, we appreciate you tuning in as well. Well, Michael, let's dive right into the show. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus? And by the way, we're talking about all things blockchain and how it's changing real estate. We're also going to touch on the commercial real estate landscape and what's going on with triple net leased investments. But Michael, before we go there, a little bit about your story.
Sure. Well, I graduated from college. I worked for a rehabber while in college. Knew I wanted to be in real estate, in business. After deciding that Greek and Hebrew are a sign from God that I should not be a Lutheran pastor. So I graduated, went into being a commercial real estate broker. I like to say I was trying to be efficient, but it could be laziness. If you can do real estate, leasing, the easiest way to do it is if you get one tenant in retail, you can perhaps do 10 to 20 tenants, and help them expand. And I'm from the Chicago area. So I'm like, well, if I can make one call and get 20 deals versus, knocking on a bunch of doors and get one deal and then have to go do it again, I think I'm going to go into retail real estate. So that's how I got in retail real estate. Is shopping centers, it's restaurants, it's freestanding, it's movie theaters. It encompasses a lot of really cool things. So I love the retail real estate business. Then from broker, I was hired in the 1980s, a large national syndicator. They owned about 270 shopping centers nationwide. Then all of a sudden, the savings and loan crisis hit in 1989, 1990. The real estate world went into a large recession. So I was laid off. And so myself and a few partners started Concordia Realty in 1990. And a lot of the people that I had met from the syndicator went into being hired by institutional investors and those larger institutions. And so we not only started doing workouts for them, which is taking loans that went bad and making them better and then selling them, but we also then started partnering with them. And so since 1990 through now, we've partnered with family offices, hedge funds, insurance companies, real estate investment trust, publicly traded non-US funds. So we've pretty much done the gamut. And then in about 2017, we wanted to try and diversify our investor base. So we started working with individual investors in our investments. So that kind of brings us to here. And then I can, talk to you about why I decided that blockchain and crypto was a really interesting thing to move into after.
Absolutely. That's amazing, Michael. Yeah, we're going to dive into that, how blockchain is changing real estate. I love that your background, though, started out in brokerage, right? Learning maybe the fundamentals of the business, and then quickly moved to getting on the other side of the phone, which is becoming an owner in the investments, right? Because the largest top 3% of wealth in America owns commercial real estate, and figuring out a way to get on the right side of the quadrant, if you will, for the rich dad, poor dad enthusiast out there, as well as partnering with folks to get there. And so you have so much there. And then you've also gone through the savings and loans crisis. I love the way you put that, large real estate recession in the 1980s for commercial real estate. But all that being said, Michael, I want to take one other step back. Okay, I want you to go back to your high school days, and I want you to think about Michael then, right? And Michael then perhaps might have identified, or people identified, gifts in you. I believe we've all been given certain gifts, and these gifts have been given to us to be a blessing and help to others. So I'm curious, what are those one or two gifts that you believe you were given, and how does that help how you help and bless people today?
I have never ever considered that from high school because it's pretty much an idiot in high school. So I guess one of the gifts was the gift of entertainment and amusement, and being a joker. But I was always interested in helping people, and I went to an interesting high school. It was an urban high school, so it was 70% Black and the rest non-Black. So it was a little bit different situation than most people go to high school in. But I can say that that really helped me realize that there is racism in the world, but you really can't love somebody unless you know them. So there's a lot of people, we hear it today. It's like, oh, we need to send money here, we need to send money there. And I, am all for sending donations and things like that, but I'm really most interested in helping people near me, and helping people that I can meet, and helping people that I can do a relationship with, and actually not helping, but sharing. So learning from them, learning their wisdom from them, and actually, can I contribute to, making the world a more flourishing place?
Absolutely love that. The power of diversification, the power of diversity, the power of growing up in an environment that was the opposite, like a lot of Americans grow up in. And so that's fantastic. So now let's dive right into that concept here with how blockchain is changing real estate. And I'm sure we'll find some themes in here of how you're using those gifts of helping people and also maybe entertaining people too. That's pretty cool. So what's the number one secret right now, you think, Michael, for how blockchain is going to be changing real estate in the near future?
I think that blockchain is really going to open up the $280 trillion. So you had mentioned that the top, I think 3 or 10% of wealth in the United States is all, a lot of it's in real estate. But the number one and the world's most proven asset class, and the longest term track record, is real estate. And so there's $280 trillion, which it's also the largest asset class in the world. And I believe that blockchain is the new financial system, and it's going to open up real estate to a bunch of people, or it's going to open up access to people to use their real estate as collateral. And it's going to make it much easier for people to use this locked up value as collateral for businesses, for, working, for creating. And the other thing is, since 1990 or so, there's been billions of people coming out of abject poverty and living on $1 a day to moving into the middle class. Those middle class are going to need some place to put their money and to preserve their wealth, and then transfer their wealth to, so that they can transfer their wealth to the next generation. It's not going to happen in the stock market. It's going to primarily happen, which is how it's always happened, with real estate.
Wow, that's really amazing. Never thought of it like that. $200 trillion, the largest asset class in the world. And if I hear you correctly, you're saying that blockchain will open up or make this accessible, or be able to collateralize it, and maybe even for the little guy, right? Not just for the big guys, because you can able to do things in a way that's ultra efficient and this the cryptocurrency portion of this. There's the the ledger there. So for those that are like hearing this, going like, Michael, like what are you talking about here? Like, could you break down how that might look in a practical application?
Sure. So I like to explain blockchain as just as the internet created instantaneous communication, and it's also distributed communication, so that if one line goes down, the entire internet isn't down. And it created almost free communication. So when I was starting out in the 1980s, you actually had to pay a lot of money for long distance. Now they're like everything is free. I'm talking to you, you're in California, I'm in Chicago, but I have people that work for me all over the world, which is so cool now. And that's free. Well, with blockchain is going to be the new financial system. So it's just like the internet created instantaneous communication all over the world. Blockchain is going to allow, and does allow right now, instantaneous value transfer, instantaneous money transfer, and instantaneous transfer of assets. So you are now going to be able to, like you could never before, because if you send a bank wire right now, especially out of the country, it takes 7 to 14 days to confirm that the money actually went through. Versus if you do it on a blockchain using the underlying technology that Bitcoin and a lot of these cryptocurrencies run on, I can send money to you in California and you'll know that it's in your wallet within a few minutes. Or I can send the money across the world to India, Africa, or the people that work for me in Romania and Bulgaria.
Amazing. So I'm gonna make sure if I captured that. So blockchain will change the real estate world, like the internet has changed communication world, right? And
Yes.
that it's going to be instantaneous transfer of value, of money, a currency, if you will, right? And the
Right.
transfer of assets. Is that a fair summary so far?
Yes. And you're going to have access to your assets like you've never had before. So that's,
Transparency and
yeah.
access to the assets like number four as
Yes.
well, and not having to have a lot of the like 14 days just to go overseas, right, on these big transfers. Like that's incredible. That's kind of nerve-wracking to think about all the things that could change during that time period. But instantaneous level, that's why we do love cryptocurrency and we love the blockchain and the future of what it's going to do for the world. By the way, okay, that's great. Let's keep going into this. Okay, so we have the first thing, which is the 280 trillion, largest asset class in the world, right? It's being able to open up that to a number of ways. Number two, it's the instantaneous kind of transfer of these things. That's kind of the how. What's the next thing that you see as far as maybe in a broker application or an owner? Because let's put the commercial real estate hat back on, right? You're in triple net, single tenant, commercial real estate investments. Break it down how you feel it's going to help a broker out, right? Or help an owner out.
Well, I'll use three specific use cases. So number one, this will probably be more effective in places that don't have good title system, but it's going to affect title. It's going to affect title insurance. You are going to have a permanent record. So the blockchain gives you an immutable ledger that's confirmed, and so nobody can change it. And so title is eventually going to go online. What does that mean for your average real estate investor or even your average homeowner? Well, you are going to be able to actually see the title on the line. It would probably make the sales of the properties a lot easier and a lot smoother because you don't have all this title insurance. You don't have a lot of intermediaries. So I think that it's going to make real estate a little bit more tradable. With that said, it might make real estate and house prices a little more volatile too, because people can get into it. But number one, it's going to make real estate more accessible. So I can decide I'm going to invest, in a property in Costa Rica. If the property, the individual house is on the blockchain, I can just go and see that I can buy clear title to it, and I can just buy it, in Costa Rica. You could do that now, but there's a whole lot of stuff going on. And, it's like, do I trust, the title and all the rest of it? So that's going to change it that way. Number two, It's going to change the way we raise funds for real estate, especially commercial real estate, and invest in real estate. So the legally, you can issue what's called a security token. So it's just like a normal real estate syndication, except for the fact that that security token, since it's issued to a blockchain, can also be traded so that people will get a little bit more liquidity, and they'll also have more options when they're investing in private real estate. The other really cool thing about security tokens, and this was, approved by the SEC, and, there's been letter rulings and things, is so we're, for our fund, issuing a 506C, which is for accredited investors only. After a 1-year lockup period, those shares of the 506C fund can trade to either accredited or non-accredited investors. And so the great thing is that it allows non-accredited investors to get into some really great real estate deals that they couldn't get into. And it also gives a 1-year seasoning period so that they can actually see how the investment has been going for a year.
That's incredible. Wow, there's so much there, and to be able to open it up to people that are accredited and non-accredited, right, after a year period of time for a 506C traditional commercial real estate syndication is huge, right? Because again, the top 3% of all wealth in America and then also in the world own commercial real estate. And oftentimes it's by scaling and partnering, like Michael built some of his wealth, right, with others that are proven operators and value add real estate or have expertise in tenant placement, all of these things. But typically it takes a big investor to get in, or just people who are very accredited and also very savvy, but they want to be able to diversify, right? They don't necessarily want to have to do it all themselves, right? Or have all the debt in their name, or have to be the key principal and the personal guarantees. Like, if I can start to diversify into some of Michael's deals and some other people's deals and these smaller chunks, that's very accessible and tradable, that changes the game. Is that a fair summary, Michael?
Exactly. I mean, you just hit the nail on the head with everything. I mean, it's just really that's what the groundbreaking thing about it is.
Excellent. So now let's shift a little bit into capital gains tax solutions part of the podcast, where we're diving into the biggest frustration when it comes to capital gains tax deferral options, especially as it pertains to cryptocurrency, right? But I first want to start with the analogy of the 1031 exchange, which doesn't qualify for cryptocurrency, right?
Right.
It only qualifies for investment real estate. But let's start with, what's the biggest frustration, Michael, that you found for your clients, friends, and family when it comes to the 1031 exchange?
The one of the bigger issues, and I am in triple net leases, and especially single tenant triple net leases. So when we, a lot of times, especially through brokerage or selling some of our properties, there's a lot of people that are in much more labor intensive and much more management intensive real estate. For example, apartment buildings or hotels or things like that. And then they get to be my age and they say, I really don't want to do this much work anymore. How do I just take this money and move it into something that's going to preserve my capital, give me a great steady stream of income, and also I don't have to work with it too much? So one of the great things about, so when I started out, I was in shopping centers. And then I've moved with the tenants, because a lot of the tenants have moved into single tenant triple net real estate because they want the visibility, they want the brand image, and they want better access. And so with that, it's like, okay, the retail industry, a lot of them are moving out of shopping centers. And so there's going to be a much higher demand for triple net real estate. And also there's this historic wave of retirements coming. So real estate owners who were baby boomers or made a lot of their money are now, or the kids don't want to manage the real estate. So what's the best way to move into a less management intensive form of real estate? Single tenant triple net leases, because the tenant pays the taxes, the tenant pays the insurance, and the tenant pays the maintenance. And so I like to call it, and we've got a podcast called Nothing But Net, because you receive nothing but net income, no hassles, no tenants, no trash.
Excellent. Yeah, and that's a great way to exit highly appreciated assets that are investment real estate that qualify for the 1031, and you can get that dependency on that tenant, right, and kind of be turnkey kind of mailbox money. But now let's shift into cryptocurrency, right, Michael? Like we just helped the client; they had $50,000 worth of Bitcoin that they bought, and it went to 50 million. And they
Mhm.
never sold, partly because of the capital gains tax, and partly because they wanted to have a good investment to put it into to diversify. And so until they met us, and then we used the Deferred Sales Trust, and they exited their 5 million position to the trust, and now the trust is investing into a business venture and also some of it in the stock market to get some liquidity and some diversification. But talk about the value of that concept, where there's about 2 to 3 trillion dollars of cryptocurrency worldwide, and if you can exit it, especially and defer the capital gains tax, this is for US based crypto citizens, right? And then you can invest into real estate deals, passive or active, or into the stock market, diversify. So it's kind of like a 1031 exchange, but it's not a
Can
1031.
now I need to ask you about what the deferred sales trust is, because I've never heard of this. And this, like, I thought you were talking about a Delaware statutory trust, which is a DST, but
Right.
I need to hear a little bit more about this if you don't mind, like, explaining that.
No, happy to, right? It gets confused a lot, right? And starting at Marcus and Millichap, we first learned about 1031 exchanges as brokers, and those was the go-to things. And then there's like these tenant and commons came around, and
Right.
eventually Delaware Statutory Trust came around. But the Deferred Sales Trust goes back 26 years, thousands of closes, billions under management. I learned about it in 2009 in Sacramento after the crash. And the biggest thing was the pain point for people that had overpaid for these 1031 properties, had too much debt, not enough liquidity, not a solid, credit tenant to make
Right.
sure they
Right.
pay the rent. And then some of them lost everything. And so my manager at the time brings in my business partner now to talk about the deferred sales trust. So the deferred sales trust is just an installment sale, Michael. And you
Okay.
know it. You know it as like a seller carryback. The difference is we're combining it with a trust. And when we do that, we don't have to finance the seller or the buyer. We can finance the trust. So there's three parties. And at close of escrow, the funds end up at the trust. And the buyer takes title, he's gone, and you're left with a promissory note. So you become the lender. That's step one, right? Which is pretty cool, right? And decent. You have a decent 8% return typically over a 10-year period. You can keep it going, renew it. But the next best part is you can partner with the trust and purchase real estate at any time. No 45-day shotgun wedding, no 180-day, marriage, right?
Right.
And we call this optimal timing. And the deal that changed it for me, Michael, is this gentleman who sold a $20 million asset in Minnesota in 2006. And he's looking around with his 1031 binoculars, and it's not looking too good out there, right? And so he's
Right.
going, I'm either going to pay the tax, or I'm going to do this deferred sales trust thing that I had never heard about before, thought it was a TIC, thought it was a Delaware or something else. And I'm
Right.
going to try this thing out. So what he did is he put it into the deferred sales trust. The funds can be invested in stocks, bonds, mutual funds. There's no like kind requirement, which is part of the beauty. And he carried back a note for that, and he put it into conservative stuff. 5 years later, 2011, about that time period, the bank calls him up and says, "Hey, you know that property is sold in 2006?" He goes, "Yeah, to that 1031 desperate buyer." He goes, "Yeah, well, we just foreclosed on it, and we're just curious. Do you want to buy it back from us?" And he goes, "Well, maybe. What's the price?" And they said 40% less than what you sold it to the other guy for. He goes, "Give me a few days." And within a few days, he had reallocated some of the investments that were in conservative stock market liquid investments into a brand new LLC with him. And he purchased it back at 60 cents on the dollar, all tax deferred. And this is where my brain exploded, Michael. And I'm going, no way. We were taught that 1031, but this is not a 1031, right?
Right. Right.
And so once you understand what this thing can do, we've gone on to do, cryptocurrency, business sales, of course, investment real estate, save failed 1031 exchanges, which gives a backup plan in case, you run out of that 45-day identification and you want something else. You don't have to identify it. It goes on and on and on, but to us, it's the Netflix to the Blockbuster way of doing things. Not that
Right.
Blockbuster is not good, but
Right.
there's a lot of asset classes out there that need this deferred sales trust. Does that make sense, Michael?
No, 100%. And I, number one, need to have you on my podcast to explain this for, a complete hour and we go through it. And then I need you to come and speak, if you can, in Austin, Texas in September at the Blockchain Real Estate Summit, because this is because we get people all the time talking to us about, I've got appreciated crypto assets and how do I trade it into real estate? And can I do, a 1031 with the crypto into the security tokens? And I'm like, no, it's not a like kind exchange. So, it would be a capital gains. So you just provided, and you just like, again, you said your head exploded, my head, it's just like, wow, this is like, there's a ton of people out there looking for this.
Thank you, Michael. And an honor to speak at the conference. And you had an analogy in the beginning. You said blockchain will change the industry of real estate like the internet changed the industry of communication. Well, we believe the Deferred Sales Trust is already changing and will change the way that people unlock and exit assets tax deferred, right, in a way
Right.
that's really beneficial. That's that kind of change. And the thing to think about is people want freedom of the movement of capital and the timing of investments, and right. And so
Right.
it's how do we combine these expertise in these three worlds of commercial real estate, taxation, and the deferred sales trust, and ways to bridge those gaps and create what's called transformational exit planning. And another saying I have too, Michael,
Is that your patented phrase? You've got transformational exit planning.
Yeah, I mean, it's not patented, but that's the one that we use, right? You like it, right? I'm a marketer too, right? So,
TEP.
yeah. So we have a new book coming out too, by the way, and it's we got Kevin Harrington from Shark Tank is going to be in the book, and which is pretty cool.
It's
But
DST for TEP.
there it is. I like that. And the other thing is this: it's no longer about cash flow, Michael.
Right.
It's about tax flow. Now,
Right.
it's always about cash flow, and it's always been about tax flow. I don't want to say that, but I want people to really think about this, right? It's like Robert Kiyosaki says, the purpose of owning a business is to purchase investment real estate, right? It changes the way that the brain is going to try to get there. So what I would say, it's no longer just about cash flow, it's about tax flow. Why? There's $30 trillion that the government has spent and is owed to mostly to China, right? And you're looking at this going, what are they going to do? They're probably going to raise taxes, right? So you've got a more important, just as important as your cash flow, or more important is your tax flow. But yeah, you can go to capitalgainstaxsolutions.com. All that being said, Michael, we're running out of time. Are you ready for the lightning round?
Yes, sir.
All right. So knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you make sure to tell yourself to do?
I would tell myself that business is great and wealth is great and success is great, but just really spend as much time with your family as possible, because you can't get back those. And I've had kids, and I tell people all the time, and I didn't really listen to it as much as I should have, but when you've got kids and they're in the 1 to 6 range, it's like the golden years, and then they just get more and more exciting, and then next thing you know, they're out of the house, and they're off, and now I'm more of a consultant than a father. It's like, hey, I can't tell you what to do anymore, but you might want to suggest this. But just spend time with your family. And then at the opposite end, my mother's getting up there in age, and she's not doing as well as I'd like to. And I regret not spending as much time with her as I can. So we're really trying to make up for that now. So just spend time with loved ones, because you're going to remember that. You're going to remember those times around dinner. You're going to remember the travel that you had with your family or loved ones. And you're going to remember those special restaurants and those nights out together.
I love that. Great. I'm writing all those things down. That was really good, Michael. Next question. What's your favorite book you've recommended or gifted the most in the past year?
The past year, and you're putting me on the spot, because I haven't really focused on one book lately. I have been giving out the one thing a little bit more this year, and I always give out Brian Tracy goals to everyone that I'm either involved with that's working for me. And then the next one is, man, I'm blanking on it right now. I apologize. But it's also a specific book. I'm sorry, I'm blanking.
Those are two
on
great
it,
books. The One
Yeah.
Thing and Goals, Brian Tracy. The One Thing, I think it's Gary Keller, and then Goals, Brian Tracy. Awesome. Next question. What are you most curious about right now?
I'm curious to learn more about different forms of what they call DeFi, which is decentralized finance. I am not sure whether a lot of it's a scam and I just don't understand it, the finance behind it. Or if, because, I'm like, they're doing all this stuff and there's these protocols out there and there's lending and there's burning coins and they're doing all this. And I'm like, okay, so they're doing all this to create what's called a stable coin so you can invest in that. And I keep saying, why not just tokenize real estate? And that would be your best stable coin, because the value might go up and down, but number one, it's not going to fluctuate. You're not going to have to do all this artificial stuff. You're going to have a hard asset that's also going to be a cash flowing asset. So to me, tokenized real estate is the ultimate DeFi stablecoin.
Amazing. We're running out of time here. So for our listeners, Michael, who want to get in touch with you, and first of all, I want to also thank you for being on the show. I'm smarter for it. I'm more inspired. It's been entertaining. You've helped me out, right? And you had me think outside the box versus just the traditional way of thinking, right? And I want to encourage you to keep using the gifts and talents you've been given to bless people and help them create and preserve more wealth in investment real estate and buying real estate, and how blockchain is going to change things. And so, for our listeners who want to get in touch with you, Michael, what's the best place for them to find you?
They can go to our website, which is libertyfund.io. That's libertyfund.io. If they're interested in learning more about blockchain real estate, up at the top, we have a button. If they just click on the special report, we have Blockchain Real Estate 2022. It explains a lot about, how this works and how it operates. If they want to go even deeper and learn more about how blockchain is going to change real estate, and hopefully they can go see Brett there too. In September in Austin, Texas, live is going to be the Blockchain Real Estate Summit. That's also blockchainrealestatesummit.com. So they could just go there. We have the super discount that expires March 31st. So depending on when you're doing this, but like I say, we are going to have some of the premier people that are not only, tokenizing real estate, but they'll also explain how to do it or how to invest in it. And then there's also going to be people that are talking about the metaverse, NFTs, and other things like that.
Amazing. I'm so excited already, Michael. Check all that out. Go to libertyfund.io. Michael, thanks for being on the show. I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to save a failed 1031 exchange, exit cryptocurrency, businesses, real estate, primary homes, stock, so you can defer millions of dollars of capital gains tax so you can create and preserve more wealth or help others do the same. Also streaming on expert CRE secrets. We appreciate everyone out there as well. If you want to get started with the Deferred Sales Trust, here's the next step. Go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. Check out our new book that's coming out featuring a couple people. It's called Building a Tax Deferred Exit Strategy. A cool guy named Kevin Harrington from Shark Tank's in the book, which is pretty awesome. And also, we have our Crypto DST Mastermind. I couldn't help but plug that. That's every single Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern, where we're talking all things cryptocurrency, exiting into real estate, as well as other assets as well. So if you're selling a business or real estate, you can come geek out with us as we talk about tax deferral, investments. And that's 10 a.m. PST on Friday, Crypto DST Mastermind.